Hello and welcome to Analyst Hangout. I am Perpetua Fasomi Peter. It's another Friday and another exciting edition of Analyst Hangout. I'm joined today in the studio by Ambrose Omodio, the Chief Research Officer, Invest Data Consulting. Thanks for joining us today.
Thank you, Perpetua.
All right. And virtually, we're joined by Vincent Oshoma, the Head Capital Market at Interstate Securities Limited. Hello, Vincent. Thank you for joining us today.
It's my pleasure. Good evening.
All right. I also have, Kasim Mugaruba Kufi, who will be joining us in the course of the conversation today. He's the MD CEO, APT Securities and Mutual Funds Limited. Well, as always, we'll start with the stock market report. Now, Nigeria's equity market, represented by the All-Share Index, reversed a 5-month losing streak to close the month of November with a gain of 8.72%. Stocks closed the month of November on a bullish run as the NGX All-Share Index in capital and market capitalization appreciated by 8.72% to close the month at 47,660.04 and 25.959 trillion naira respectively. Now, this is despite several negative headwinds coming into November. During the month, Nigeria continued to witness rising inflation, another interest rate hike, and foreign exchange volatility. Now, these were the things that characterized the month of November. But in spite of all these, we still saw that positive close. Now, I'd like Ambrose to talk to us about what he makes of this performance. What do you make of this performance?
I would say that, one, we'll start from looking at the price of the equity. Like I said, that price speaks a lot when it comes to equity investment. When you see Nestle at a price of 1,200, it sends a signal about Nestle. If you see Nestle at a price of 500 naira, it sends a signal about Nestle. Now that for the 5 months, we're seeing price on a decline. Coming to that level of November, we saw that this price become attractive and already entering close to the end of the year. Seeing that dividend yield of these companies are high. And this is where you are sure that this dividend yield will come, because no matter how bad it is, if a company is not increasing their payout, they will pay what they paid the previous year. And on the strength of the previous year, you are seeing already the yield are already high. And this company has posted a good result for third quarter. On that note, for investors, it becomes attractive for them. That's why I say people are doing what we call cherry picking in equity market, because most of these equities are cheap and their prices are low and yield are high already. And also, if you consider the period, like I said in the last program, time and price are very, very important.
Yeah.
If you look at the price, any assets you are investing, the price to appreciate or for you to get a better yield. But depending on the time frame you're going to wait for that investment. For example, in Treasury bill, you have 91 days, 180 days, and 364 days. And these are different, come with different yield. But for equity that you are going to spend less than 6 months, you're going to make almost higher than what you're going to stay for Treasury bill for a whole year. For a design investor, it seems that, we can take advantage of this one. I even come back and play this same Treasury bill. For that, I believe that investors just kind of reposition their portfolio, see that equity is becoming more attractive, and not forget that despite we are seeing a low volume in the market, we are seeing fund entering. Because if you look at the volume flow index in technical analysis, it tells that funds are moving from as low as almost 16 points, almost 82. And that gradually, yes, we're not seeing PFAs playing the market, because if PFA in the market, you see the volume on increase. But if PFA so funds are coming one way or the other to the market, especially after doing another redesign, we don't know where this form are coming from air, from kitchen, from we don't know, but they are seeing them gradually in the market, in any form what they are coming. That is also what is part of the market for now. And also, don't forget that end of the year seasonality is around the corner. We expect to see Santa Claus as from second half of this month. Because once you are from 15th, you see the market changing. That's every that in the first week of December, we expect to see a mixed market, but from the second half, you see activities improve because of what end of the year that will come. For me, these are what the attraction. That's why you just mentioned when we are reading. That's why the headwinds of we are seeing our GDP decline for almost 3 quarters, from first quarter decline to second quarter, third quarter. Yes, but the good is that we are not in recession, only just a contraction. But if we look at the kind of
but there are those who are saying we're in a stagflation.
Oh, fine. Yeah, I agree with that, because your inflation is above what? Above 20. But if you look at what came out from potential manager for the month of November, you see kudos for this quarter. In the month of October, we saw expansion in terms of manufacturing sector, the private sector. In the month of November, it's also expansion. So that despite the rate hike, the business are still going on. And don't forget, I said that the last quarter of the year is the most active quarter in any climate. For that, you can see that showing up. If we are seeing a growth from 53.7 to 54.6 in marginal index, it tells you that activities are increasing, and this activity is also going to reflect on the last quarter result of this company that will come at the end of the year. For me, I still also that most of the companies as a third quarter have surpassed their performance, for 2021. If we are still expecting that this quarter will add to their performance, investors will think that this company will have a good number to pay them a good dividend. That's what is driving the market. It's not that there's something else about simple that the prices are low, are cheap. These are the attraction in the market now.
All right, Vincent, I believe you heard everything he said. Do you have anything to say to that? If you can hear me, Vincent.
Sorry, I'm having problem with the network. I didn't get you.
Okay, can you hear me now?
Yes, I can hear you clearly.
Okay, now what would expect the latest hike in NPR, to favor the fixed income?
I can hear you clearly now.
What did you say? Okay, you can hear me. All right, if you can hear me, I was saying that, one would expect that the latest hike in NPR would favor the fixed income and money market securities. Do you think that is the case now?
I think if I hear you correctly, you said it was the expectation was that NPR will favor the fixed income securities. If I think that's the case.
Yeah, that was what I said. So I'm asking, what do you think? Is that the case now?
Yeah, if you look at the performance for November, you will say that is not the case. But if you look at what has happened before November, you have seen the impact of NPR on the equities market, as we have recorded negative performance every month since we have seen since May, when the CBN MPC meeting started increasing rates. But we saw a turn in November, and like Mr. Ambrose mentioned, there's the fact that we're entering the end of the year, and people are looking at other factors beyond the economic headwinds that we are still very much with us. People are looking at other factors. When you look at the market, people are still seeing some value in the market, looking at the Q3 results that were released to the market. And as I approach the end of the year and gradually gets to the earnings season, people are taking position in some of those stocks. I think that's why we saw a rebound in the stock market for the month of November. So though it's not the usual scenario, but it's not something that is far-fetched. It's something that you can still attribute to the fact that we are entering the end of the year and people are seeing some value. Another thing I can also attribute it to is that if you look at the inflation figure, because one of the things that have been driving the increase in rates in the last few months, the fact that we have seen continuous surge in inflation in the last few months. But in the last 3 months, we have seen a gradual reduction in the rate of inflation compared to the previous month. People tend to look at the fact that it seems that we have gotten into the peak, and so we will not see, we should not expect continuous increase in hiking rates as it has been done in previously. And if you look at it in some developed countries, we have seen a reduction in inflation figures after a while. So I think those are some of the factors people are looking at. And when you now look at the rate in the fixed income and also looking at the dividend yield in some of those stocks, people look at it that the yield on those stocks is better than what you're going to get in the fixed income space. So I think that's what some persons are looking at, just taking the risks in the market, analyzing the risks, and making some cherry picking in the market. So it's not far-fetched.
Okay, that's a good one. I think that aligns with what Ambrose said. So Ambrose, talk to us about the stocks that drove the numbers we saw in November. What sector?
Actually, if you look at the market performance for the month of November, I would say yes, we have a bullish sentiment. If you look at the market breadth, I would say it's a mixture. We have 40 losers and 40 gainers. But because of the high capital that gained in the month of November pushed it high, because you saw the life of Dangote Cement in the first 10. You saw the life of HL Africa, the first 10. Seeing these two alone gaining the month of November, that was attributed to the 8.7 or so. But the good news is that we are seeing banking sector being a kind of the toast for investors, because this sector has been consistent in dividend payment, and also because they've suffered losses before this rate hike. Now we are seeing impact of rate hike on the performance of the banks. Because looking at the Q3 number for the banks, we have seen across all the banks, both are operating within and outside Nigeria, especially outside Africa, outside Nigeria, within the African continent. We are seeing that their numbers are better. Then looking at their price, become more attractive for investors to operate. That's why I see as they are going into industrial goods, telecoms, and bank. I'll tell you, these are the three major sectors that already drove the market for the month of November.
So should we take position in those stocks?
Yeah, good. You can see MTN around the 229 for me is very attractive. If you can see Airtel selling about 1,400 and today now almost 1,500 for Airtel, and MTN still below 300 naira. I see a lot of value in that stock because they are also in the same industry. And don't forget that MTN is really same. I say it's a smart investor or smart company approach that any product you are going to, any service you are going to, you need to take a patent from the government that, oh, I'll be the only company that will do this for Nigeria for now. That means that when I saw the two of their move, I said these guys are smart. That means even though we're having more telecom companies coming to Nigeria, those services that they are already put on, you can't come in because they have government that give a patent. That for me, that is something. But
what about competition? Aren't you looking at competition and fairness in the market?
Competition for either for the data, for your call line, other stuff, but for social services they are doing, they are going for patent. That patent that you can't do the same service here in Nigeria because they started it. That's why that a company that is going to expand in their cash flow. Don't forget that this is a company that also at the same time have introduced G5, I mean what's called 5G. Now they tell you that for everyone of us that needs fast internet, you need to look that way. Yeah, and also they are going into mobile banking. No, they are not only just doing telecommunication or you calling or using your data. They are going to way to expand their cash flow, and cash flow is what supports your earnings. Any company that has earnings that without cash flow won't last. That's why I say any analysis you are doing as an investor or analyst, once you are seeing the company earnings, go and check the company cash flow. Is it consistent with the earnings that can flow and also support the earnings? Because if your earnings is going up and your cash flow is declining, there is a disparity. That means that earning will be sustained. And we need even investment what is against the future. We need sustainability for it to earn. That is for an analyst, you need to look at the top line is good, it's getting to look at the company cash flow. Is it expanding? Is it in direction with the earnings? If that, good to go.
All right. Well, very quickly, let's look at December now. We'll be looking at what to expect for the month of December.